Hey, what's going on, guys? Money Making Joey, the Forex and crypto trading guru, back here doing another video for you guys. And in today's video, I am going to be giving you guys a little gem. And I'm actually going to do it kind of quick, probably just make this video a couple minutes long. I am wrapping up a day trade that I have in silver, right? And I got into this trade today. I took several trades today. Silver was one of them. I took a few Bitcoin trades today. But one thing that I wanted to speak to you guys about, and I was doing a consultation. Speaking of the consultations, down below this video in the description, you will find a link to my website. I do have a day trading group, do have an online course where I go over all of my different, trading strategies. And you can also book a one-on-one consultation with me for anyone out there that's watching this video who might be struggling just a tad bit when it comes to, their day trading journey, right? But I was on one of my one-on-one consultations actually last week. And during this consultation, I was sharing my screen. We were on Zoom. And one thing that I noticed with this guy, he had been day trading for some time and he seemed to be doing okay, but there were a few things that he were doing that was just a tad bit wrong. Now, for a lot of newbies out there, I'm going to be 100% honest, right? You should probably stick to one asset, whether it be stocks, Forex, or crypto, and get your feet wet in that before you make the decision to trade all three, right? Because if you're not journaling your trades correctly, and if you're not really keeping track, it's going to be easy for you to get, I don't want to really necessarily say confused, but you won't really be able to keep track of the data the way you're supposed to, right? Because I found that this guy was taking trades and not really forgetting about them, but more so not really having a planned exit based off of, just when he got in the trade. I always tell my guys, before you enter a trade, right, you should already know where your take profit levels are going to be and where you're going to consider, to close that trade out, right? So like one of the things that I teach inside of my course, gotta plug it, links down below in the description, right? But on a serious note, one of the main things that I teach inside of my course is going on higher term time frames and plotting support resistance lines, golden pockets from the Fibonacci, everything like that. So when you kick off your day trading for the day, you automatically have these levels plotted out. So that's done off the higher term time frames. Now, when we start to move down just a tad bit to, time frames like the 30-minute, the 15-minute, or even the 5-minute, right? We are taking the areas that we plotted out on those higher term time frames and then now flipping down and taking a look at them on the shorter term time frames and now looking for other indicators such as maybe the volume profile. But typically for me on a day-to-day basis, I am using this custom RSI indicator that I have to go ahead now and say, hey, price is starting to come to this level that I have already set based upon the higher term time frames. When I look at this RSI, am I now going to get a bearish or bullish divergence? Or does the market just shoot right past this point, right? If the market shoots right past it while we're on the lower term time frames, I am not going to enter a trade. I am going to wait for confirmations. And typically, like I said, for me on a day-to-day basis, this is going to be on the RSI. I need to see a bullish or bearish divergence in that area for me to go ahead and take a trade now. And one thing that I definitely need to point out to you guys is that sometimes I feel like there's a lot of jumping around and people aren't really sticking to the plan, keeping a trading journal so that they can, journal their day-to-day activity, what trades they took and how it worked out for them. Because let's hypothetically say I enter a trade off of the 5-minute chart. I am not going to take any profits, set any points to take profits, or even consider to close that trade based on any information that I see on any other time frame. If I open that trade based upon information that I received off of the 5-minute chart, I am going to set those levels and close the trade based off of information on that very same time frame. The same thing is going to be true for all of you guys out there that's intraday trading or swing trading. If you enter your position off of the hour or even the 4-hour, you need to be exiting your trades based on the information that you're seeing there. Now, depending on the current market sentiment, I will be honest with you guys. If I entered a trade off of the hourly time frame, let's use that as an example, I will at times, if I'm a little bit uncertain or I'm looking to take profits or even close the trade just a tad bit early, I will then now go ahead and maybe look at the 30-minute or the 15-minute and create some entry points a little bit sooner for me to, one, either go and enter that trade, or like I was saying previously, take profit points, or either close that trade. So definitely something that I want all of you newbie traders out there to keep in mind and take into consideration. Like I said, I just wanted to make a short and sweet video for you guys. That's just a tad bit helpful for today. And like always, if you guys have found value from it, do go ahead and give this video a thumbs up and get subscribed to the channel. Money Making Joey, the Forex and crypto trading guru. I'm out of here, and I will see you guys in the next one.